There are people that love and hate Apple in equal measure, but no one can deny that it is certainly one of the biggest companies in the world. Apple Incorporated is the largest and arguably most successful company of the 21st century. From its humble start in a California garage in 1976 to the $1.1 trillion company it is today, Apple's success has come from being a leading innovator not only in the field of technology but in finance as well. The emphasis on proprietary technology and controlling the accessory and add-on market that Apple has maintained has some clear benefits. And while Apple products generally don't play well with non-Apple devices, they play very nicely with each other. Apple has also generally delivered smooth, sleek experiences to its customers, and as a result, has a lower entry barrier than many competing products. Apple's total stockholders' equity equals $96.5 billion as of June 29, 2019. This consists of $43.4 billion of common stock at par value and additional paid-in capital, $53.7 billion in retained earnings, and less accumulated other comprehensive income of $639 million. Apple has roughly 4.57 billion shares outstanding. However, there are some business practices that Apple uses which are questionable to say the least. With that said, let's take a look at 10 untold truths Apple hides from shareholders. A federal judge has ruled that Apple has to face a lawsuit accusing the company of hiding the fact that iPhone demand in China was declining, leading to tens of billions of dollars in shareholder losses. The specific focus is on the comments made by Apple CEO Tim Cook during Apple's fiscal Q4 2018 earnings call. The proposal highlighted Apple's 2017 removal of virtual private network apps from its App Store in China. Such apps allow users to bypass China's so-called Great Firewall aimed at restricting access to overseas sites, and Apple's action was seen as a step to preserve access to the country's vast market. As a recap, Apple was forced to revise its Q1 2019 earnings guidance due to fewer iPhone upgrades and significant demand problems in China. Apple's stock dropped drastically after that announcement, with this representing one of the rare times Apple has had to revise its guidance. Apple has faced increasing pressure from investors about its relationship with China. So, recently it has published a human rights policy document that commits to freedom of information and expression following years of criticism from investors that it shows too much difference to Beijing and exceeds to China's censorship demands. Apple faced similar proposals in 2016 and 2018 that drew less than 10% approval. This year's ballot failed again, but this time only 59.4% of those who voted were opposed. The 4-page document formalizes Apple's commitment to respecting the human rights of everyone whose lives they touch, but concedes that the company is required to comply with local laws, although it stops short of mentioning any particular country. The commitment comes 7 months after some of Apple's shareholders defied management and supported a proposal from a consumer advocacy group called Some of Us that would have compelled it to uphold freedom of expression globally. Apple reportedly tried to strike the proposal from the agenda but was denied by the US Securities and Exchange Commission. One of the reasons why Apple is not winning investor support is by being more opaque with iPhone unit sales, and that could hurt shareholders in the near term. In September 2018, Apple unveiled a new lineup of products, but it isn't clear if the excitement they generated is translating into sales. The number of products Apple shifted was relatively flat in its most recent quarter, and the firm's forecast of 0 to 5% year-on-year revenue growth for the holiday season disappointed investors, triggering a steep market sell-off. Apple exasperated matters with its decision to stop saying how many iPhones, iPads, and other products it has sold each quarter, raising suspicions that it had something to hide. The iPhone unit metrics being pulled was the straw that broke the camel's back on Apple's stock, said Daniel Ives, managing director of equity research for Wedbush Securities. In recent years, Apple has responded to a slowdown in smartphone sales by raising prices, and this move has helped the company enjoy record revenues even while the industry generally contracts. However, both global and US growth are expected to slow, and recent data on consumer spending has been mixed. The fact that Apple demands $750 for the cheapest of its new iPhones is at risk in the event of a slowdown, and its own sales forecasts have exasperated those worries. Clearly, the average selling price price trend can't continue forever, said Angelo Zeno, equity analyst at CFRA. I think the real concern out there for investors is how long can they keep this going? Apple has identified its services business, which includes items such as Apple Pay, Apple Music, and the App Store, as well as to book $50 billion in services revenue by some time this year, drawing on its large user base. However, investors generally still have a lot of questions. For example, Apple hasn't formally shared its plan for television and movies, and its goals for breaking into the health industry also remain relatively obscure. Analysts will have to adjust to a business driven by smaller regular payments instead of big hardware hits, said Carolina Milanesi, an analyst at market research firm Creative Strategies. In 2017, Apple shareholders rejected a proposal that would have required the company to improve the diversity of its top ranks. This is the second year in a row that Apple shareholders have shot down the proposal, with just over 95% of the vote opposing it this time around. The proposal submitted by shareholders Tony Maldonado and Zevin Asset Management asked Apple to adopt an accelerated recruitment policy and to increase the diversity of senior management and its board of directors. Maldonado and Zevin had argued that Apple's upper ranks were responding too slowly to the company's own diversity initiatives, and that it would ultimately come back to bite them, be it through missing talent or new opportunities. Apple essentially said that its existing diversity efforts were doing enough. Our ongoing efforts to increase diversity are much broader than the accelerated recruitment policy requested by this proposal, Apple's board wrote, but despite improvements to hiring, Apple's overall diversity is still lacking. The company's leadership is 82% white, and its senior leadership has historically been almost entirely white as well. Some mental health conscious Apple shareholders are trying to encourage the tech giant to research the effects of excessive iPhone use on childhood development, but not everyone who invests in the company shares their concerns. Ross Gerber, CEO of Gerber Kawasaki Wealth, posted the tweet in which he was quoted saying, "Truth is, we like investing in things that are addicting." While he was probably trying to be funny, the shareholders who wrote an open letter to Apple say that their concerns are well-founded, stemming from a growing body of research that shows a link between increased smartphone use and growing rates of teen anxiety and depression. Apple has responded to the criticism by vowing to introduce more parental control features, although it declined to be specific. In the meantime, Gerber points out another casual link he thinks Apple investors should be concerned with, the one between addictive products and profits. "Addictive things are very profitable," he told Reuters. Although Apple has consistently won first place as one of the world's most admired companies, the company has had many ethical challenges and pressures, which makes it an ideal firm to research. The three key ethical issues Apple faces pertain to product quality, privacy policies, and social responsibility. Apple has $268.9 billion in cash and marketable securities, more than $250 billion of which it's holding outside the US. As a result of the Donor Relief Act of 2017, Apple can now bring that money back into the US at a 15.5% rather than 35% tax rate. However, rather than investing in manufacturing plants and jobs in the US though, the company is planning a huge stock buyback. Conflict mineral substances like tantalum, tungsten, tin, and gold are used often in electronics because they have several useful properties. They are extremely resistant to high temperatures and can also withhold an electrical charge for a long period of time. Most coltan that is used in manufacturing is mined in Australia. However, it can also be found in the Democratic Republic of Congo, where their mining sales have historically funded armed groups associated with murder, rape, and other human rights violations. It is known that these groups sell coltan to manufacturing companies, and there is no way for sure to know whether companies that supply Apple have purchased their coltan in this way. Apple is the most valuable public company of all time with a market value of more than $800 billion. But Apple is also particularly adept at avoiding US taxes on these gargantuan profits. Although Apple does not use any tax avoidance schemes that are illegal, regular people do not like to hear about big businesses that are not paying a fair amount of tax on the billions that they are making. The major strategy Apple uses to reduce its US tax bill is to artificially shift large amounts of its domestic profits profits into tax havens. This allows Apple to avoid paying US taxes on these profits while also paying very little in foreign taxes. This is possible due to a loophole in the tax code called deferral that allows US multinational corporations to forego taxes on profits of their foreign subsidiaries until they are paid as dividends to the US parent company. Apple, along with other companies, were investigated by the Senate, and it was found that they only pay 2% tax on their profit.